I'm AJ Oden, Global Investment Strategist for JP Morgan Wealth Management. We've got some great questions you've sent over, and we're going to answer them today. Let's get started. So do you think the labor market is bending or breaking? So we think it's bending, and even though we've seen an uptick in layoff announcements and private payrolls have trended lower and brought focus on the overall labor market, its sentiment indicators and other leading indicators point to a potential rebound. One of those has been the NFIB Small Business New Hiring Plans Index, which has trended upward over the last couple months, especially as we've gotten greater clarity on fiscal policy. Then you add to that the October JOLTS report showed that job openings were actually quite consistent. Now, another thing that we focus on is the consumer, and the consumer has been quite resilient. And even though sort of Black Friday sales and holiday sales, which make up about 20% of overall retail sales, have been sort of a mixed bag overall, we see the consumer as being resilient, which should support corporate profit margins going into next year. How do you balance recession odds against 2026 soft landing as policy lags hit? So our view is that U.S. growth can inflect back to a trend-like level around 1.75% real GDP growth next year. And although we've seen the lag effects of tariff policies in this quarter and even potentially leaning into next, we believe those to be short-term in nature, and that continued investment into artificial intelligence will have a meaningful impact on GDP growth going forward, along with fiscal policy clarity continued into next year, monetary policy easing, and additionally, OBBBA stimulus will help to support growth into 2026. What's one region that could have high economic potential for the next 2 to 3 years? So for us, it's the US, which is in the early stages of a multi-year growth story, and AI is really at the forefront of that. And what we've seen for the hyperscalers and what we expect into 2026 is they're going to invest about $500 billion into the end of the year, which should fuel productivity gains and drive global GDP forward. Now, this isn't just a tech story. We see this as a modern-day space race between the US and China, and really these two regions are remapping supply chains to prioritize security and reliability over cost and efficiency. At the center of this is really the energy story, because AI requires a lot of energy, and so what we're seeing is cost as well as access to energy is really being part of the overall story, and so it's going to matter when it comes to driving AI forward. Thank you so much for your thoughtful questions. We'll continue to monitor the labor market as things evolve.